My name is Alex Duta. I'm a fellow restoration contractor that grew and scaled a restoration company from my dad's garage to over 8 figures, and now I'm on a mission to help you grow and scale yours. Today, we're going to be talking about a very sexy topic, and that is money.
I need a dollar, 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 that's what I need. Hey, hey. Well, I need a dollar, 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 that's what I need. Hey, hey. Said I need.
So growing up, I remember my parents, first generation immigrants that had started a business here. My father was a general contractor, and he would come home with receipts and bring them to my mother. And then those receipts would go in these shoe boxes and sit in these shoe boxes until tax season came. And the 3 months of tax season were an absolute living hell. They'd be down in the basement, you would see receipts all over the floor, everything would be tallied up one by one, and then they would go to their bookkeeper / accountant person and they would file their taxes. At that time, they only used accounting or the term or the philosophy of accounting just to establish their tax liability with the IRS. But there's so much more to accounting than just that. I think one of the best things that we did right off the bat at Romextera was we implemented accounting measures from the very start. So we got a subscription to QuickBooks within our first year of business and started utilizing it very heavily, not only to categorize everything for our IRS benefits or liabilities, but we also used it to be able to see the profitability of our business and key metrics of our business. You see, a proper accounting system serves like vital signs of your business. So think of a doctor, right? When you go to the doctor and you have some sort of symptoms of something, the doctor will go in and check those with a blood pressure gauge, or maybe they'll do some blood work to be able to tell. They won't just go in there and say, well, Mr. Jones, we think that you have high blood pressure based on the symptoms that you're telling me. So just like a doctor needs those vital signs to be able to tell what's wrong with you, as restorers, we need vital signs to be able to identify key problems within our business. So I recently had a business owner come to me and say, Alex, I'm shutting off my marketing because I don't have money in the bank. And it's not working. The marketing is just not working. I'm like, When we did a little bit of investigation, he was actually using QuickBooks and had a financial system in place. We realized that he didn't really have a problem with the marketing efforts. Those marketing efforts were producing jobs, and those jobs actually were on the books and invoiced. He had a collections problem. So therefore, when it came to the reality of things, he was hemorrhaging cash because of the collections problem that he had. He was producing jobs, invoicing customers, but didn't have enough time to follow up with the insurance companies to get paid. Therefore, his bank account was empty because everything was going towards his employees and so on and so forth, but none of the money was coming actually back in. So using that example, we're able to take a look at, if we have a good financial system in place, we're able to take a look and see what's going on. If we don't have a great financial system in place, that's kind of hard to infer, and a lot of times we act out of gut instinct. Now, when we look at finances, we can split up financial statements into 2 different types of metrics. And one of them is accrual, and the other one is cash. Cash basis finances, or cash basis accounting, is essentially money in and money out. How much money has come into the business, how much money has gone out on cost of goods sold, and then how much money has gone out on overhead, and how much money was remained in the bank. Now, I do separate cost of goods sold and overhead for a reason. Cost of goods sold are your direct job costs on a project, whereas overhead is what basically keeps the lights on. So it's important to differentiate the two, because you can have one company that can be very cost of goods sold heavy, meaning they're not making gross profit on their projects. They're wasting money on actually producing their projects. And then you can have bottom heavy restoration companies. Bottom heavy restoration companies just have way too much overhead. Maybe they have a bigger office than they need. Maybe they have more office staff employees than they actually need. Anyway, back to accrual versus cash. So we talked about cash revenue is money in and money out. Now, what is accrual revenue? Accrual revenue is what is produced versus what is incurred. So what I mean by that is, in accrual revenue, if I write an invoice to a customer and they haven't paid it yet, I'm still recognizing that as income because I actually did the job and I produced it. If I have a bill from a subcontractor or from a vendor for that job, even though I haven't physically given the money to that subcontractor, I'm still going to recognize that revenue as a cost of goods sold. Now let's take this example. I did a $10,000 job for Mrs. Jones that I didn't get paid on, and I paid $5,000 to Albert the painter for that job. Accrual basis accounting will tell us that we took in $10,000 worth of income, even though the money didn't come in the bank yet, and we paid out $5,000 to Albert, showing us a profitability of $5,000. Now, when we look at our cash basis scenario, if we take a look at that $10,000 would not be hitting our books, so it would actually be zero, and that $5,000 left our bank, so that's telling us that we're negative $5,000. So which one's right? And the answer is they're both right. It just depends on what you're looking for. Now, when we look at both stories together, it tells the whole picture, meaning we are hemorrhaging cash because we have not yet collected money from Mrs. Jones, but we have been pretty profitable in the fact of if we do and when we actually collect those funds, we'll be able to make them. So I hope that this really opens up your mind on the different vital signs that accounting can kind of provide for us and why implementing restoration accounting systems right away within your business is really important to the growth and longevity of your business. In the next video, we'll be talking about what accounting system to use and why.
I need $1.